Okay, good morning, everyone. Thanks for joining. I think this week is interesting week. Actually, past 2 weeks, right? Because this is the earnings seasons. As of now, I guess most of the companies, at least those that I pay a lot of attention to, already reported, except for Apple. Apple, I think it will be report their earnings on Thursday next week. So I think that's the only one big tech that hasn't reported as of now. So exciting times. So far, I think my impression, I don't have any slides to cover the earnings. Actually, I'm still reading all the transcript one by one, taking some time to read them. I think actually most of them are quite good, especially like Microsoft, the one that I'm currently reading, right? When after they give the like the opening statements and then just run through the results, when the analysts started to ask questions, you see that okay, they all keep on congratulating the management team of the good results, and then I think that's good signs. I mean, for those who didn't, like you haven't paid too much attention to a company, sometimes we don't know whether like when they report like 20% margin, is it good or bad? We don't know, right? We don't know the details because we haven't tracked it for that long. But just from the tone of it, we can tell that whether the results is like good or bad. So I think that's something that we can get from the transcript. Yeah. So I think overall, okay, the results quite good, but we can still see that like now, first quarter of 2023, the results is not as good as like 2 years ago when during COVID period, there's a lot of like market rally and the financial results of all these big tech also went up a lot in the past 2 years. Now we can see that there's some slowdown. It's just that I think probably market pricing into a lot of all this slowdown that didn't materialize, meaning that the result is still better compared to expectation. That's why I think most of the big tech, at least for this quarter, after the results, show some green after the earnings. So I think that's good. Okay, I'll just go through the questions here. Let's say if there's any questions that you want me to further clarify, please feel free to just ask. Okay, okay. Start from the first one. I think these questions was posted quite some time ago, but it's still interesting to go through that because I think we skip a couple of weeks. First one, Bezos become chairman. Is he still running Amazon? Does he still go to meeting involved in Amazon? What area is he now involved in versus in the past? Actually, I don't have much information on this because after he stepped down from the CEO positions, NDJC took over and then he essentially became the chairman. I think the chairman, right? They are the chairman and the board, right? They are not the management. They represent the shareholders. So because I think Bezos also still hold quite a number of Amazon shares. Let's say if NDJC did something bad or he lose the trust or something like that, right? Then I think Bezos, he has to step in, appoint a new CEO or even himself to become a CEO. Also possible. This happened in quite a number of companies in the past. But in this case, right, because I think Andy Jassy, based on a couple of interviews that I watched, I think the way he managed the business is more like a continuity versus Bezos' time because Andy Jassy has been with Amazon for quite some time. Actually, he doesn't join right from the start, but I think it's like when Amazon is just a couple of years started. Andy already joined the company. So he's helping Bezos for many years and he has been the CEO of AWS for many years. So that's why there's not a lot of changes compared to during Bezos' time. So if you look at the situation that they're facing, right, I would imagine that let's say if Bezos didn't resign and continue as the CEO, right, you will still see the similar problem that they are facing now. So I don't think the so-called the poor results that they have been experiencing in the past 1 year or so, right, is because of Andy or because of Bezos, right? It's not the management. It's because the COVID situations that they're facing, and then they ramp up their capacity too much, and then suddenly now demand is not there. So they have all this efficiency problem that they are facing, which I think we talked a lot in the past. But now I think they are slowly moving towards the right path, which is to reduce their costs, further optimize, cut their capacity and so on. So I think they're heading towards the right direction. It's just that when you look at the financial result, it doesn't show up immediately. Say, for example, a couple of rounds of layoff recently. This is definitely good in terms of cutting their expenses. And we all know that like Amazon, I think at its peak, they have about like 2 million workers. But I don't have the numbers of how many percent of those is the, the white collar, high paying job, right? But right now, the most recent layoff, I believe they are really cutting the high paid one. So I think right after the cut, right, you won't see the expenses drop immediately because there's still a lot of expenses, all the severance package they need to pay up and so on. So all this you don't see immediately. But if you just observe their numbers over the next, let's say 6 months, right, definitely you will see some improvement from the efficiency gains and also cutting costs here and there. So that's why I think they are on the right path. It's just that whether they are able to increase their free cash flow, their operating margin to the extent that justify their valuation, that's I think still questionable, because valuation is not just about the margin, it's also about the growth. And right now, I think if you look at their business lines, for those, in terms of their business lines, it's e-commerce and cloud. Cloud one in the past is the one that is making a lot of money. But as of the recent 1 or 2 quarters, you can see that there's some slowdown in the cloud business also. So that will also bring down the valuation. Right? So I think it's a mix of all these effects now. But overall, to answer these questions, I think whether he's still running, I'll say the answer is no. He's not running the business anymore. We should hope that he doesn't need to come back. If he suddenly come back, I think that there will be a bigger issues. For example, like during Maurice Chang, TSMC happened in the past, right? He appointed the CEO and then he have to come back because there's no loss of confidence towards the CEO. So I think that's the situation. But as a chairman, he still have power to make big changes if he wanted to. I think that's the summary now. And the interesting one, I saw there's this Coachella, I think music concert that someone spotted him there. So he's chilling out, enjoy his life. And I think he put a lot of effort into the rocket companies Blue Origins. So I think the core business of Amazon, like the cloud business and their e-commerce, I don't think he's involved that much. That's based on my impression. I don't really have any, data to support that. So because he also didn't give too much of, statement on Amazon. So when Amazon news come out, it's always Andy, Jesse and the rest. They are the management team. All right, next one. How come Amazon proxy report says Bezos never received any stock-based compensation in history, but Elon Musk take a lot of stock compensation? How does Bezos motivate himself? I think this is quite interesting questions. Actually, I tried to look up the historical stock-based compensations that Jeff received in the past. I even do some, query on ChatGPT. I think ChatGPT mentioned to me that in the past, Bezos did receive some stock-based compensation, but the amount is very little. Then the question is, how does Bezos become so rich without the stock-based compensations? Like Musk, Elon Musk will always say that he become rich because of all these stock-based compensations, right? But Bezos, the answer is no. So I looked up the information. I found this. This is the extraction from the S1 filing, and this is the filing that Amazon did when they IPO, and I think they IPO in 1997, if I recall correctly. So it was some time ago. So you can see that because Amazon, this company is really like founded by Jeff Bezos, and I think the first seed capital is not even like outsiders. Is like he gets some money based from his own saving, and then I think he got some money from his parent. So it's all like his own monies. That's the first seed round of capital, so that you still retain quite a sizable percentage ownership of the company. And after the IPO, and assuming that the IPO the share issuance is like 100% subscribed, right? After that, 42% of the Amazon shares still owned by Jeff Bezos, and 10% is owned by the trust and family. So you can see that even right after the IPO, he owned half, like 52% of the company is owned by Jeff Bezos. And you know that when the company's IPO, the company is not worth like 1 trillion, right? It started out with a very small market cap because it was just start up back then, just selling books. Even like there's so many people that say Amazon won't survive and so on. So it started out as a very small company and then grow, now become like a trillion dollar companies. And as of now, I think he retained maybe about like 13 or 15% ownership. So his wealth, right, is mostly derived from the appreciations of the shares that he owned, which is this don't know, like 13 to 15% ownership into Amazon's lah. And also aside from this, he also liquidated some Amazon shares and then maybe take his money and invest in other companies. I think he has quite a sizable stake, like in the magnitude of billions in other companies. For example, like Google, I believe he also invested in Google in the past. So yes, the answer is he became rich because of huge stake that he has on Amazon, and Amazon grew from a small company into like $1 trillion company. So this is the main source of his wealth. Back to Elon Musk. I think Elon Musk one is because I don't know the history. I can't quote it out of my memory on Elon Musk's situations. But there's one that often talked about is the stock-based compensations that he received. But that stock-based compensation is not like, okay, you just get the free shares and that's it, right? It's not like that. It's really like, okay, you have to meet certain criteria in order for you to get the shares. And indeed, he did. The result really, like he achieved those results. So what happened after that is that he received quite a number of all these shares, and these shares are like like newly printed Tesla shares that he received. So if you look at the filing, you can see that actually his share ownership into Tesla is increasing one because of all these milestones that he hit, and then he just pocket all these shares, and hence once he sell all these shares in huge magnitude, so it can flood the market with shares, and the stock price will affect it as well. But really, those shares, right, it's not like Elon Musk his own shares. He himself he had the shares lah. It's just that I think quite a sizable of his net worth came from the stock-based compensations. That's why there's a little bit of difference compared to these two lah. Yeah. So I think that's the different situations. And these questions of how does Bezos motivate himself when he hold like, 15 or 16% ownership into the company, and he's very bullish on his own companies, right? And he work on it. I think that's enough motivations for him to stay as CEO for so many years. And finally, now he's retired. So he going to proceed his hobby. Next one. How come Tesla CFO Zach Kirkhorn never worked any accounting jobs before? No accounting cert. How come he can become CFO? Is it something to be fishy? Okay, this one, I pulled up something. Let's take a look at his experience. So you can see that, okay, this internship, you can ignore this. And then he worked in McKinsey for about 2.5 years as a senior business analyst. Then he became the senior analyst in finance department in Tesla in 2010. So he has been with Tesla for 13 years now. And he actually, grew up, just climbed the, what we call the corporate ladder, from senior analyst, become senior manager, then become director, senior director, VP, and now become the CFO. So, and I actually go and search some, all this ChatGPT answer, right? But I think you can read out here. And then the next, okay, I think this is something wrong. Okay, so this is the answer given by ChatGPT. You can read out the details now. But I think all in all, just to say that when it comes to certification, right, maybe yes, he might not have like all the, I don't know what, SCCA or accounting certificate, right? But actually to become a CFO, you don't really need that. Because let's say if you're an accountant that you do accounts for others, and some job, right, really requires some certifications in order for you to perform that, right? Then you need the cert. But as a CFO, as long as you know finance, you know how to run the finance of the companies, right? Then actually you don't need the certifications. There's no requirement to say all CFO must have what kind of certifications. It's not like that. So I think that's the key point that I want to talk about on these questions now. In terms of whether he's good or bad, I think hard to say, but maybe, you know, it's not that easy to convince Elon Musk. That's my first impression. To appoint you as a CFO, right? So he passed his bar, so that's one. Secondly, you can always listen to the earnings transcript to know whether this guy know what he's talking about. Because sometimes especially when Tesla isn't that successful, so maybe a few years back, right? If the analysts, they want to ask some hard questions, they can really ask that. And it will be quite obvious to the analyst whether the CFO know what he's talking about. So I think that's something that you may be able to hide it for a short period of time, but to hide it for a long period of time is actually quite tough. And I actually read like Tesla transcript for quite a number of quarters. I think Zach give me an impression that he's quite like neutral, fact-based, and when he answers question, it's quite methodical. It's more like, he didn't like create narrative for no reasons. Right? He's just like very plain, just to answer, this is what they think and so on. So I think he really know what he's doing. So nothing fishy here. Just to answer these questions, right? Yeah, I don't know. The rest of you here, do you guys want to give any comment on this? Or anything that you found that very fishy? Kindle? Maybe aside from the earnings transcript, you can listen to the Investor Day. I think he also presented a segment. So I mean, you can listen to the presentation to have a gauge if you think he's fishy. Okay, next one. Is it necessary to get latest version of Kindle? Where to try and view Kindle in retail store in Singapore? Does Kindle support Libby app that can borrow ebooks from NLB? I think, yeah, I'm not aware of they have any, store for you to try out. But I think what you can do, right, is that you just ask around. I'll guess that your friend, probably they also have Kindle, because Kindle is not like, something that you wear on your wrist that people can see, right? So usually people, when they do reading, they might just read during their free time at home. They might have a Kindle that they didn't, bring out, and you don't see it, right? So you just ask around. I'm sure some of your friends have some Kindle devices, so that you can just say, I want to borrow and take a look, just have a feel. I think that should be, yeah, you just need to ask. I think some people will have it now. Then whether it support Libby or not, I don't think so, because Kindle, right, is not like an app store, or it doesn't operate Android. So it's not possible to install all these third-party apps based on my understanding. But Kindle, they read the file format, what we call the EPUB, EPUB. So any format that you have, right? I don't know whether the NLB one, because I don't know what source that they're using. But as long as you have the source in EPUB or PDF or even text, right? You can actually use the text to throw the text file into some website and just convert it into EPUB. And you can send it to your Kindle device. Like, for example, all these earnings transcript, right? Sometimes I don't stay in front of my computer for a long period of time. What I do is that I just copy the transcript into text, and then I just convert into EPUB, and I send it to my Kindle so that I can read it during my commute. So I think that's quite nice, able to read. Because usually, I think the Kindle, I need to stress that the function of Kindle is not about what they have. It's all about what they don't have. So when you're reading your Kindle, you have less distractions because you don't have like phone notifications and so on. So I think this is quite useful. So you want to stay focused on your reading, right? Yeah. So that's the thing. Okay. Next one. What is the difference in cost for enterprise using cloud versus on-premise at each level of IT spending below 1 million, 1 million to 10 billion, 10 million to 20 million, and so on, and across geographies? Okay, I'm not in IT, so I can't really answer this question. But I guess on this, like talking about each level of IT spending, I don't think it's all about the level of IT spending. It's more about like what you want to use, and what are you trying to achieve. Because say, for example, if you just want to use cloud for storage, just storage, nothing more, that's very different compared to say you want to use cloud and specifically you want to use the GPU service to run some AI stuff, right? So, these two, in terms of their, the spending level could be different. But ultimately, it's what kind of capability that you need on the cloud to help you run all these things. So I hope you get what I mean here. So say, for example, you say you want to run some AI training, right? You can just rent it from all these AWS or Azure to do some project here and there, because you don't need the hardware sitting at your company or at your home, right? You basically just have something you want to train it for 2 weeks and it's done, right? You can you just basically use cloud is more using cloud is more, how to say, cost saving, because you don't have to maintain all the on-premises hardware and so on. So it makes a lot more sense and cost effective to using cloud. But let's say for storage, does it make sense to use cloud, or is it better that you just do some what they call the RAID or some backup solution, and basically the hard disk just store it at home or in your company? Probably just on premises also good enough, right? So it really depends on the use case and what kind of functionality that you need, and not about the amount. Because if you talk about the amount, it's all about how much you want to scale it up, right? Say, for example, storage, we say that storage is very cheap, but imagine that you want to store 1 petabyte of data, it could, rack up to millions of costs also, right? So it's not about the amount. It's about what kind of functionality. Okay, as I said, I'm not in IT, so I can't really help to answer these questions. Anyone want to contribute, helping me out with these questions, or anything you want to comment on here? Okay, next one. Walmart seems to invest in tech like Flipkart, Shopify. Is it Shopify or Shop? I don't know. How to know where the full list of tech companies they invest in? Wow, this one I actually don't know. But first place I will go to is their 10K reports. So you go to 10K and then see whether on their balance sheet is there a very big investment holdings. And if yes, definitely you can do some. Let's say you know that Walmart invests in Flipkart, right? I don't know Flipkart how you can just do a a keyword search in their 10K. Just look for Flipkart, right? Because they already invested in this company or this tech. So once you do the search, then you can look at the details, or is there something else that they listed in the same page? I think this is something that you can do. And if not, you can do a Google search or look at the image, see is there any graphic that shows, okay, what are the companies that they invest in and so on. I think this one, and finally, you can always use ChatGPT just to see whether they can come up with any good answer or not. And of course, you can't believe everything that ChatGPT says. That you need to verify it. Go back to 10K and try to read out. So these are the couple of places that you can go to. I really don't know. Is there any mandatory filing that they need to show what they invest in? Because Walmart, I think these are strategic investment. These are not investment holding. So they don't have the 13F filing that to show the details. Okay, that's my limited knowledge on this area. Anyone want to give some comment on this? All right. If we buy Hong Kong or Singapore stocks from IBKR, will we be able to receive email instruction to do voting like we've been receiving for US companies bought from IBKR? I think as long as you bought from IBKR, I believe they have they will send us some email to say to do all this voting and so on. But for me personally, I haven't been that active when it comes to voting because, I own like tens or hundreds of shares, right? It's really doesn't really matter in terms of how I vote on all this proxy voting or I don't think my shares count. So I don't really vote. As someone, let's say if I disagree with what the company is doing, I just sell my stake instead of try to influence the decisions via my voting. I think this is really for those who have a very concentrated portfolio and have a sizable portfolio, and they hold into companies that's like smaller company. So let's say if the company is smaller, you have a huge stake. In terms of percentage wise, you have like a more significant percentage, right? Then it makes more sense to say, okay, I want to take a more active role in terms of the voting, in terms of like try to socializing with other shareholders and try to influence them in terms of how they vote and so on. I think these are the stuff that worth doing if you invest in smaller company and if you have a big stake. For me, mostly still diversified portfolio, so I don't really care about all this voting. But back to your questions, I think you should receive anything regarding all this proxy voting. And if no, right, you can always use the MooMoo, use the IBKR. There's this chat function that you can use, right? I think you can send message to them and say that, okay, I want to receive all this notification and so on. I think the customer service should be able to assist you on this now, especially if you can name which companies that you want to be involved in now. So they will send you. Okay. All right. If we buy US shares via Tiger MooMoo, will we receive email to vote like the IBKR? Local brokers like OCBC don't allow. The last statement about local broker like OCBC don't allow, I don't think so, because even for all this custodian brokerage, right, I think you should still be able to tell them that, okay, in terms of the proxy voting, what kind of instruction you want to give them. I think they should be able to do it for you. But I need to check on this, but I really can't tell for sure. But back to, I think Tiger MooMoo, I think still the same thing. You need to reach out to the customer service and just tell them whatever that you want them to send to you. Or you want to like opt in certain things, just reach out to the customer service. And I think some of them, they actually have all this like chat function, right? You just need to, during working hours, just text them, and then maybe you still need to queue. And once your turn, you just tell them that, okay, you want to receive all this email and so on. I think they should be able to assist. I think these are quite a basic function. It's not like some good to have things. I think all brokerage, they have all this, because it is your right as a shareholder to vote, right? They can't say that, okay, you use my platform, I'm your brokers, you just park you use me as the broker, that I don't provide you this kind of service, right? I think these are very basic things. BuyWithPrime on third-party website, is it bad for Shopify? They started building fulfillment network but cannot fight with Prime. Is it likely merchants choose BWP, which is BuyWithPrime? I think the BuyWithPrime, right? This is definitely something that Amazon come up with. You can say that it's like trying to compete with Shopify. But I think the main reason isn't about competitions. I think the main reason is because they have all this capacity. They have two choices, right? Either they really let go of this capacity, close down warehouses and so on, or they just find a way to utilize it, which is using all this like BuyWithPrime, and then get some partners and then try to maybe just utilize all this hardware that they have. So, but once they use it, right, they will compete directly with Shopify. So that's the things. Is it bad for Shopify? I think yes, that means more competitions. But in terms of strategy-wise, I don't think they are the same, because for Shopify, right, their selling point is not about like, okay, they have, like, of course, service is good. I think their selling point is mostly to say that, okay, we let you keep your brand. We just serve the infrastructure for you to build your very nice looking website, and we serve you from behind, we support you, but we don't take away the how to say, the image or the branding and so on. That's why there are quite a number of all these websites where you can buy stuff, right? You don't know they are powered by Shopify, so they basically just support from behind. So basically all these companies with brands, right, they will prefer to work with Shopify so that their brand is in front on that website. Whereas for Amazon, that's not their selling point. Their selling point is to say that, okay, we are the platform. So many all these sellers sell on our platform. That's why it will attract many buyers. So buyers, they will just go to Amazon, and when they want to buy a specific thing, they just do a quick search, right? So basically, for Amazon, they are offering a platform. Whereas for Shopify, it is not a platform. It is like individual websites that people can go to. They can place their order. They keep their branding. So I believe that any companies that have some sort of brands, right, they will prefer to work with Shopify because they don't have to compete in terms of price. There will be smaller risk of their product become a commodity. Whereas for Amazon, I think you can't really say that, okay, because of my brand, I just keep the price like way above the rest. Because if you do that, right, once your product is compared versus other products, which some of all these other products, they're in terms of their quality also quite good. But when putting side by side, your buyers might just go and buy all these other products, right? So there's some risk of like commoditizations if you are operating on Amazon. But the good thing about Amazon is that their platform is so big that you're just able to sell to many buyers if you put there. So in terms of value propositions, I think these two are very different. So if you invest in either of one, I think that there are reasons for like different kind of reasons. But when it comes to Shopify, I know that I think about a year ago, they announced that they want to build their own fulfillment network. I think this is definitely something that they have to do, because if they don't do this part right, they will always be behind Amazon, because Amazon is not just about, buyer seller. It's all about like the speed, the kind of like, like fulfillment. They can do the fulfillment very fast, right? This is definitely the selling point. So for Shopify, in terms of to compete with Amazon, they have to do the fulfillment. The bad thing about this is that it will be very costly. So you can't expect that Shopify will forever be like the software high margin business, because it's just not sustainable. So I think just pay attention to this. Anyone want to give your comment on like between Shopify and Amazon, or any on this topic you want to comment? Yep. I think the second part, is it likely merchants choose buy with Prime? I think depends on their strategy, and I believe they can use both also. So it's not like they can only choose one, right? So but as long as like buy with Prime, as long as Amazon they offer all this fulfillment at a right cost, and also they supply the customer using the Prime, right? So I think definitely still something good propositions from Amazon side now. I think that's something. EV battery price falling quite a lot from the peak. Is that the reason Tesla cutting price? Is there oversupply in EV battery now? Okay, let's address the reason that Tesla cutting price. I think this one, yes, they are cutting price mainly because of the supply demand, as mentioned in their transcript, and I think Elon also explained quite a number of times. The problem now is that Tesla car prices is still too high. So if they keep the price, there's just not enough buyers, and the inventory will build up. They can't store all this inventory. So it's either they slow down the production or they need to cut the price. Cool? So in the end, they decided to cut the price. Of course, when they cut the price, it's able to spur more demand, right? Because some people on the fence, whether they want to buy Tesla or let's say like BYD, they might go for BYD because of the cost. Once the price is cut, so they will just jump in to just buy Tesla. So I think really that's the supply demand equations that they are playing. Then of course, when deciding how much to cut, there's always a flaw, right? Say for example, usually I believe companies will look at the marginal cost, like the price versus marginal cost. As long as the price is still above the marginal cost, meaning that they sell one additional car, they might earn less money, but they're still earning money. It's not like they are losing money, right? So it still makes sense for them to continue to just sell one more car, right? So I think when deciding the marginal cost, you need to look at the cost structure of the production. And when it comes to the cost structure, I think the battery price is one of the biggest component. And whether EV battery has dropped or not, I don't know. I haven't looked at the data specifically on EV battery, but the component of the EV battery, which is all the lithium, like lithium commodity and so on, all this has dropped and dropped quite significantly from the peak. So of course, when the raw materials price drop, marginal cost drop, so they have more room for them to continue cutting the price and not hitting their margin so much. So definitely that's something that allowed them to do the cut. Imagine that now all the raw materials didn't cut but increased, right? Do you think that they will just continue to ramp up their production by, I don't know what, 30% or 40%, and continue to lose money for every car that they sell? I don't think so, right? So definitely the battery price drop is something that helped them to cushion the drop in the price. But it's a combination of all these two effects, meaning that the raw prices has dropped, battery price has dropped. And they want to take advantage of the EV credit. So they're able to cut the price significantly. And this is always the strategy, because I think like Tesla situation is they started out from the premium market and slowly moving down, right? Because imagine that they want to sell 10 to 20 million cars a year. They can't stay at the premium market, right? They have to go down. They have to compete with Toyota, even Suzuki, or all these companies. If not now, it will be like 3 years, 5 years down the road, right? So this has always been the path. So the thing that as a shareholder you are betting on is not about like, okay, they are not cutting the prices. For sure they will be cutting. It's just that we hope that with all this manufacturing capability and upgrades and automation, they are able to just use their scale to further reduce the cost and be a leader in terms of the cost, meaning they have cost advantage. If that's the case, they can continue to cut and still making profit and still increase their production to 10, 20 millions. And eventually they are still a very like profitable company if they are able to do that. But let's say if they are manufacturing, there's some hiccup here and there, they are not able to scale and not able to cut the cost, and some other companies that are able to produce with an even cheaper price and still profitable, then it's gone case for Tesla, right? So it's all about like how good are they when it comes to controlling the cost. Yeah, I think this is definitely one key things in terms of their moat over the next 5 to 10 years. I'm not saying it's given, but at least this is something that they are aware of, and this is something that they strive to become a leader. Yeah. By the way, any other you guys want to add on anything? Okay, no. Do you know instead of Shopify, is it other method to build own website is hire programmer server to build? Is there other similar to Shopify? What is their moat? I don't remember their alternatives. I think Wix also have something and some other companies. I'm sure there are some, but I can't recall the names. But I think definitely like Shopify, what they're doing is just that, okay, they say we have a platform, not platform now. We are the, like the service provider. We provide you some tools to help you create your e-commerce business. So that's their business proposition. If you don't want to use Shopify, of course, from scratch, you can do this. It's just that it's very difficult. And all these like services provided by Shopify is that they know how difficult it is to create an e-commerce business from the scratch. That's why they built Shopify to help other businesses. So this is some like they actually the CEO or the founder of Shopify, I can't remember his name now. Luke, right? Toby, I think that's his name. So he actually started out his own e-commerce business, and he realized how difficult it is. That's why he realized there's a market there. So definitely you can do your own, but I think who want to spend like 6 months just to build everything from scratch and not just like started up with Shopify and use their e-commerce building web tools and then use their payment tools. And now I believe they have some logistic offering, straight away use their logistic. I mean, as a starting point, sometimes using all these services means that you have to pay for it. Okay, there's some fee. But if it speed up the entire process, right, it's definitely worth it, right? Because what you want to do is to quickly, if you have an idea, you want to quickly just build up your website and start selling. And of course, if your scale become like 10x, 100x bigger, you might want to get out from Shopify and do your own thing. That's definitely possible, right? But whether you want to do it or not is another different questions. But I think for those like small startup, I think to have companies like Shopify to help them speed up the entire, the startup phase, right, is really something that is very valuable. So I think this is definitely their selling point. Is there any other similar to Shopify? Yes, I think they are. It's just that I think Shopify is still quite a dominant one in terms of their, their value propositions. There might be some others, but I can't recall the names. Yeah, what is their moat? I think the moat is all about the trust. Because imagine that all these small startup, they started up with Shopify and then they grow from there, right? So what Shopify is doing is like they offer scale. So say for example, there's no Shopify, all these companies, they do their own thing. When it comes to shipping, they have to do their own thing. There's no scale, there's no, very hard to use AI or to, optimize the entire network and so on. So it's very hard for every one of them to survive. But as long as you have one company like Shopify that aggregate all these, when it comes to delivery, they can help you to optimize and so on. So they can pass through all this saving to their customer. So basically, they become like something like aggregator, and that's definitely something that is I would say very valuable to, and it can make profits definitely because they are leveraging on the scale, right? So in this sense, right, I think it's a little bit similar to TSMC. For example, like TSMC, they also have all this expensive machinery. And once they bought all this machinery, sometimes they help AMD create some chips. Sometimes they help Apple create some chips. So they can leverage on the scale. And I think this is something that like big companies can do. And that's something that Shopify is doing. So it's quite an interesting business model. And it's quite unique. And I think they are still like growing. I think because I believe that although Amazon is big, they have a very clear propositions. But I don't think every companies want to build their business on Amazon, especially those companies that focus a lot more on branding. Yeah. And usually these are higher margin business. Okay. Quite a number of Shopify question today. Because I don't recall I shared anything on Shopify before. In the past, I invested. It's just that try out. I think I have like after I hold the companies for some time, it's a small positions. Then when I consolidated my portfolio, I didn't hold Shopify. I think one reason also because of their profitability and also because this entire warehouse logistic network. I don't know like how expensive it is. And it could be entirely different things as compared to what they have at the moment. So there's a relatively higher risk of executions there for Shopify. But I have quite a number of friends that invest in Shopify, and I think they are still quite bullish on this company. All right, next one. Anta, Hong Kong, 11 billion share placement, had only 10 billion of debt. 8 billion profit per year. Is China always have this kind of dilution risk? Equity is most expensive form of financing. I think this is quite interesting because I haven't paid attention to this company. So I did quickly look at the news. And I think this is the news that you are referring to. And the news was 18th of April. So sorry, I think we skipped 1 or 2 weeks. So I gave this response quite late here. But I think I look at their like the summary of their financial statements. It seems that the company is profit making. So I don't really quite get it, like why they need to raise equities. Because the company is like, making profits, right? It doesn't really make sense. But I think the key point here is that they say they plan to use the proceeds for the repayment of outstanding debt and for general working capital of the group. So meaning that they take the money and then they basically pay their debt now. So I'm quite curious, like why don't they just roll over the debt, right? Maybe because the debt is much more expensive. So I really don't know the details. It's just that usually when a profit-making company suddenly want to raise equity, I think at least one thing it signals is that the company may think that the share price is higher than the fair value. That's why they just want to raise some equity while it makes sense to do so. That's just my guess. I really have no idea on why they're doing this. That's why I think probably the market also sense that like the uncertainty, like is there something that they're hiding there, and maybe they are not as profitable as what they are showing on the balance sheet. So maybe these are the reason that why after the announcement the share price has dropped, and there's some uncertainty there. as I said, I haven't paying attention to this company, have nothing, like, don't know their business model, don't know what kind of product that they're doing. I don't want to comment too much here. It's really speculations if I comment too much. I don't know. Anyone here want to help me out on these questions? Anyone have studied Anta before? Want to share your view? Okay. If no, we just skip that. Punti, do you know MacBook? Is it like iPhone? We don't have to install antivirus because it won't infected with virus, unlike Android phone, Microsoft laptop. I'm not really a techie person, but I think to answer your questions, right, whether MacBook will be infected by virus, I think technically the answer is yes. As any platform, any operating system, that it's possible to be infected by virus. It's just that one thing I think Apple, when it comes to controlling their hardware and software, I think they are quite strict. So I would say harder to be infected by virus. This might be true. Secondly, when all these people creating virus, right, they want to affect as many computers as possible. And you look at MacBook or Mac market share, they are still very small as compared to Windows. So for those like who create virus, right, they might prefer to just focus on infecting Windows PC and not MacBook. I think that's also another reason why people say that MacBook is not as easy to be infected by virus. So, and I'm just for information, I haven't owned MacBook in the past, so I really don't know in terms of the details. But when it comes to iPhone, yes, I think iPhone maybe it's because Apple, they have very strict control on what apps are available on the App Store, right? So they will really look through the security and so on. So they make sure that it's not that easy to get virus and so on. So I think that's the reason that usually we don't have to really worry about installing antivirus on iPhone. So yeah, I don't know. I am not a tech person, right? So I give it a pass. I just give my own understanding on this. Yeah. But I would say that as a Apple shareholders, right? I think that if you are using a laptop just for like browsing web, watching YouTube, maybe use some Google Doc, Google Sheets, or all these like you don't really need it for a specialized software, right? I think MacBook is just a much better product as compared to Windows laptop. I think one thing I can give one example is on the battery. The battery is definitely better because of the ARM processor. So I think that's definitely my recommendations. If you can, choose, MacBook is the one to go. Okay. Anyone want to comment? YCX, you want to comment on this?
Yeah, actually, nowadays you don't need antivirus software. The thing is, the avenue of getting viruses is actually depending on what applications you use. So, for example, if you're getting viruses from the internet, it's usually from your browser. So, you want to focus more on whether your browser is secure. So that's the focus that you should be on. So nowadays, because how antivirus usually work is that they have a signature database, so they're always late. Because obviously, if the virus creator already has a signature in their signature database, then it's not useful. So why would they even use that virus? They themselves will already check whether their virus passes the virus database itself. So there's no point for them to do something like that. They usually, when they create new viruses, it's always going to be new. They won't have any existing signatures. So there's no point for antivirus. The whole point is that when you get a secure browser, all these kind of things, right? Then what will happen is that they will prevent those kind of like security vulnerabilities. Like, for example, if you open PDF in your browser and your browser never disable scripts from running, then the PDF can run scripts and then you get some kind of malware. But if your browser has already prevented scripts from running by default, right, then that is not an issue. So it's that kind of idea. So ultimately is what kind of surface area you want to expose to whatever attack vectors, usually the internet. And if it's exposed to the internet, then you should update those applications as often as you want. Then, of course, the other thing is, that's basically it. There's nothing else to that.
Sorry, I click on the unshare buttons. Okay, thanks a lot, YCX, for the comment. Yeah, I think that's on that. Let's come back to this. Next question. Why is SoftBank sale of BABA reported only on news but not on SEC website? I haven't checked the SEC website. I believe, I actually don't know. I think SoftBank, I think they should appear on some filing. If not, if you look at their, I don't know, as SoftBank is not a US company, right? So maybe there's no 10Q. I don't know. I a bit like unsure for companies that's not US companies. But come back to this is that I think you should be able to find some disclosure whenever they have all these like bigger transactions ongoing. But even if not, all these, reported things, right? Usually they are quite reliable one. I mean, you just, because these are fact stuff, right? Reported that they sold Alibaba shares and so on. So these are not like opinion. So when you see on the news, I believe these are true. It's just that, sometimes news, they came out, even at the rumor stage, they came out. Of course, you straight away go to SEC website and do some quick search. You might not able to find it, right? So, but maybe after some time you go and search, maybe you are able to find it. So that's my point. It doesn't come out as like that means the first source is not the SEC website. It's not that it come out in the SEC, then people comment about it. It's about like, okay, there's news on the market and some this news agency picked it up and just write an article on it. Then we know about it. So yeah, I think nothing much. I think, and these are really like just sale of the shares, right? It's quite a normal things. All these companies doing all this regularly. So maybe I would say don't pay too much attention, because whether SoftBank continue to hold Alibaba or buy more or sell, right, it shouldn't affect your decisions when it comes to your ownership of your companies, right? It's like you own the companies because you want to invest in the companies and not because someone else own it, right? So I would say maybe don't pay too much attention on this now. That's my point. Okay, another tech related questions. May I ask if you know wireless at SG, is it by the government and safe to use? Understand free Wi-Fi got virus, but not sure is wireless at SG okay. Y6, you want to give your comment on this?
Well, of course, I don't know much about wireless at SG, but assuming it is what it is, it should be encrypted and whatever. But if it's not, or whatever kind of things, the government probably still has your data. So it depends on whether you consider the government taking your data considered as something that you want or don't want, up to you.
Yep. Yeah, I haven't really been using wireless at SG before, and this is a complaint from my side now, because I tried to use it once when I was at the library, and it's really, really hard to use it because I use the laptop trying to connect and then need to fill in this and that. After that, it's still not connected. So I think it's very like quite a hassle to be connected on wireless. I don't know whether it's because of the my laptop or something else. It's just that I prefer just use the hotspot from my phone instead of relying on the wireless at SG now. So this is just a complaint from my side now. Okay, enough of this. Next one, Buffett CNBC transcript, is it you save it in PDF and then send to Kindle? Is it easier to do that? Okay, because this one is a website, right? CNBC website, they post the transcript. Basically what I did is I just highlight everything, copy, paste it on text, meaning I use the notepad, and then I save it as the TXT. I go to the website and then basically you just do a Google search, say TXT to EPUB. Then I think the first two options, either one of them will work. I think you just click into it, dump the text file into it, convert into EPUB. And then from the EPUB, you just send it to your own Kindle. And then once you refresh your sync, your Kindle is on that already. So it's quite easy to do. Usually just take me like, less than 5 minutes to do that. So yeah, very easy. You just need to know the steps. 1, 2, 3. Just do that. I think worth it so that you have it on the device. Is it is Kindle better to your eyes as compared to iPad? Will you feel tired when reading from Kindle? Will it affect your eyesight? I think the special thing about Kindle, right, is that it looks like paper. Like I think some people who haven't seen it when they first saw it, it's like, wow, is this like real? Is this screen? Because I really thought that screen is like a paper, So I think that's the good thing about the device. It's really not straining when it comes to the screen. It's really much better compared to like iPad or phone. The only thing that is not as good as iPad is that the screen is smaller. iPad screen could be like 11 inches, right? So especially if you use it to view PDF, so it's a lot better just to use iPad if you are viewing PDF or any document with color. But if it's just like text format, right? Like the screen size isn't that important because you can always size the phone and so on. So and you can make it comfortable for you. So I think it's definitely a lot better. It's like the feel, right? It's a bit like reading novel. Like novel, you don't have like a big book, right? You have a smaller one. So the screen size is about like 6 to 7 inches, right? So I think it's quite nice to read on Kindle, and the device is also quite light. So I think that's something I like about it. All right. After Amazon enter Hollywood, Bezos seems shift from frugal, humble to loud, extravagant, and breaking vow of marriage. Do you feel comfy investing under his leadership? I think, okay, first, when talk about leadership, Amazon leadership, right, I will pay more attention to Andy Jassy more than Jeff Bezos. That's one thing. Second thing, I think what Jeff did on Amazon is that the culture that they have is very unique kind of culture. Actually, all these companies, although we tend to call them like big tech as if they are all the same, right? Actually, they are very, very different when it comes to the culture. And the culture, right, I would say maybe 70% is really shaped by the founder and also their, maybe their first 20 employees. They are, all these pioneers that really built the culture up. So I think the culture is there. I don't think Bezos is running the business day to day. So whether he's buying his yacht or he's like very, extravagant and spend money here and there, I don't think it's a big problem for me because this is his money, right? So of course you have money you want to spend, that's your problem, right? About the marriage wise, I think this is maybe it's already a culture thing, like the US or it's very different when in terms of how they view the marriage versus Asian. I think that's my first impression when it comes to talking about marriage. So actually, you just look at the list of all the billionaires, right? See how many is divorced or actually married twice or 3 times or 4 times, right? You see, actually, it's quite rare to see like a person just like married and stay married for decades, right? I think it's quite rare. So I'm talking about like on US now. So I don't think that affect me because that's the personal life, right? The one that affected me is like, okay, when it comes to their leadership, when it comes to their management, what kind of philosophy that they are having, and of course the executions and the execution is always the hard part. We can always talk about like efficiency, they want to cut costs. You can talk about this like quarters over quarters, but when you look at the numbers, it doesn't show up. It just means that they are unable to execute, right? So you want to take that into considerations, and not so much about the personal life of the founders. Okay. All right. Can Tesla FSD be installed into the EV of Ford, GM, Rivian, Neo, BYD, etc.? Theoretically, I mean. So yes, it means they can sell FSD to other EV if their FSD succeed. Technically, yes or no, or practically yes or no, because I think technically anything is possible. even if you say they want to install the FSD on ICE car, can someone say this is impossible? I doubt so, right? But practically, I say won't. I would say that Tesla, sometimes in terms of how they develop their products, right, it's similar to Apple. It's like they just do their own thing. And when they do their own thing, right, you will notice that they are very good in terms of their own hardware and software integration. But when it comes to integrating with other players or other companies, right, it will be very bad on. So I don't think, I think you shouldn't bet on that this FSD that they create will be installed into other companies. I don't think we will see this even if you give them like 10 to 20 years time. I just don't expect. Yeah. So that's just my take on it. Yeah. And one thing is not about like whether Tesla want to do it or not. It's just other companies, they also don't want, right? So yeah, I doubt so. Anyone want to comment on this?
It's actually a question of liability because if let's say they sell it to other cars, the other car companies, their implementation details, right? Based on regulations and based on liability could be different. So then it becomes like some kind of licensing agreement with Tesla, but then they don't have control over it that might affect their brand, if anything.
Yeah. From both sides, I think Tesla don't want to do that, and other companies also don't want to do that. But I think on these things, right, if you talk about like all these other companies, let's say if they really can't develop their own autonomous driving or all these autopilot functions, right, I think what they will do is they will just keep on leveraging on other providers, say for example like NVIDIA. So I think definitely they have a or even let's say Apple or Google, as long as it is a companies that doesn't compete directly. So I think that there's some possibility that all these companies can build some sort of platform for or like some solution to help all these companies just to park the autonomous driving capability into their cars. I think this is definitely possible, but definitely not Tesla. Okay. Next one. Have you intend to attend the virtual AGM of Amazon, Tesla, etc.? Is it easy to register to attend? Nope. I haven't attend and I don't know how to do it and I don't plan to do it. I don't know. To me, it's just like, because all these companies, they already have the like quarterly earnings, and some of these quarterly earnings in terms of the questions asked, right? I think it's really good questions. Help us understand what's happening with the company. I don't think the AGM, I need to attend that now. I don't recall I get anything good from the AGM. AGM one, I think the best one is Berkshire. Berkshire don't have the quarterly earnings, but the AGM is really, really must watch. I think some of these questions posted by, like general public, right? And when they ask questions that is like, out of Berkshire, some of these questions is really interesting, and the answer given by Buffett is always good. So that's the only one that I will attend. But let's say companies in Singapore, maybe I might consider to attend. Sometimes it's not about like just to listen to the management, right? Sometimes it's about like network with other shareholders. It should be quite fun. I don't know. I think can consider. But for me, talking about like virtual AGM of Amazon, Tesla, not in my opinion. Okay. Those stocks options issued in prior years now underwater. How to know which company adjusted the X price, which never adjusts, like Buffett say, honest, dishonest? YCX, can you help me up with these questions? I really don't know what does it mean. Are you on mute?
When they say like which kind adjusted the X price, which never adjusts, typically these contracts, if they write stock options at a certain price, they will give at a certain date. So even if there's a split or whatever, the price will be adjusted after the split as well. So I don't get the question. Like, Isn't that usually the case?
Yeah, I believe so. Because if how to say, if you don't adjust the price and you can just do a stock split and affect the outcome of the options payoff, I think this is going to be a big problem. There will be a risk of like stock split if you invest, let's say, like a call options, right? So I really don't know. Like I think this is given. Like you say, I agree with you, and that's why both of us don't really understand these questions now. Maybe you can elaborate a bit more. Whoever asking these questions, maybe you can give us some example to help us understand what's your questions. If not, a little bit hard to comment if we don't fully grasp your questions now. We'll give it a pass for now. Let's say if you have more, description, then we can comment later. Okay.
I mean, the other possible case would be that the company issued more shares, like really issue a lot more shares. Like maybe they promise you something, and based on a certain number now, maybe let's say there's 1 million shares now, promise 100 shares, but then invested for 3 years, but then they also promise many other people that have even more share count, then kind of dishonest, but that's only if you're an employee and you get this kind of case. So it is possible if you're an employee and you get this kind of case. So then this one will really depend on the how would I put it? Usually what happens is, because when you get this kind of stock options that you vest and then you cannot sell anything, right? And then let's say the company management does this kind of things. What usually can happen is that you can also quit the company and then sell your options to whoever is in the company management or something at a cheaper price. But then if you don't do that, they will still probably dilute away what your stock options are anyway. So that happens, or you could just renegotiate your employment contract such that you don't get this anymore, or you threaten to quit or something. That's the kind of things that can happen, but that's only if you are an employee. As a shareholder, these kind of things, you won't be affected by these kind of stock options things. But of course, if the company wants to dilute you, depending on how transparent they are with reporting this kind of thing, then you will know. If they don't report and they dilute, then they are depending on the local regulations, they are probably at risk of lawsuits or whatever kind of thing. So that's the kind of outcomes. Yeah.
Yep. Okay, thanks for the comment. Yeah, I believe the question is talking about like all these insiders, employees, not so much about the investor, option investor. But I think we need some example to illustrate that. If not, I really don't know the questions. Okay, let's continue with the questions. How come use TikTok app never see advertisement, but they reported US 80 billion advertising revenue, even if have also faster swipe away? Where's their advertisement? I don't know about you. I myself have seen advertisement. Usually it was shown as promoted. If you look at the bottom left corner, so like they will say this is promoted. So I think that's the only one that I believe how they advertise. And I think aside from that, in terms of their revenue structure, I think, for example, like those who do a live streaming on TikTok, let's say they try to sell stuff, maybe TikTok take a cut as well. I don't know whether that fall under the advertisement or the 80 billion revenue or not. I'm not that sure. And also bear in mind that you and I don't know, the 80 billion is not just TikTok. I believe it is ByteDance. So they have a sizable market in China on Douyin. I think that one also contributing to their advertising. I don't know what they are running there because I don't have access to Douyin. I haven't used that before. And not these two only, right? They also have Toutiao and a couple of other business. So I think all these businesses also, there's some advertising revenue. So I think we are seeing like a subset of the total. That's why sometimes a bit hard for us to gauge like how come they can rack in so much revenues, right? Yes, I have a same view as you, as like I think that 80 billion, so that's quite a huge revenue. But in terms of what they are doing, how they are doing, really, it's very hard for us to gauge because they are not listed. So when it comes to disclosure, it's like just a very small amount of disclosure as compared to other companies which are listed now. But anyway, even if you think the company is good, you can't buy. If you think it's bad, you can't short. So maybe we just wait to see whether the companies will IPO one day. Then we have a lot more information to analyze. So
They
that's
have
on.
they have those kind of purchase streams in China, right? Whereby they have like those kind of those kind of TikTok stars, then they have those kind of product reviews or product recommendation streams that's usually like 2-3 hours long, and then they will just advertise certain products that they themselves recommend or personally use and things. And then each of those streams can generate like tens of millions of dollars each time they run one. So then from there you can kind of see like they have each of those streamers, right? They have their own niche. Like there's those that do makeup, there's those that do fashion products, this kind of things. And because the market is quite large, and every time they do these streams, there are those people that just buy according to what the stream recommends, because there's so many products and people don't have time to go and test out all the different products. So they trust whichever streamer there is that recommends them the products, and they just buy immediately from that kind of things. So it's kind of like window shopping in that kind of sense, except that the window is the TikTok app. Yeah.
I think you bring out a good point here. When it comes to the business model in this sense, right? Actually, you shouldn't compare, let's say, like TikTok, ByteDance versus, like Facebook or Google, YouTube, right? Because all these like YouTube, they really just run the ads and then that's it, right? It isn't that easy for you to watch YouTube. Suddenly you just buy stuff and watch YouTube, buy stuff. So it's very different, right? Those are really just company paying you to show their name, the branding kind of advertisement. Whereas the one that you just mentioned for TikTok or Douyin, the short form videos, actually now it's not short form video, it's like live shows, right? They are essentially competing with Alibaba and JD, right? Because this is like those who use these services is not ready for entertainment anymore. They really use it to do shopping. They listen to the recommendations, they look at the demo, and then they just buy, right? So I think like you mentioned, all these companies, they take a cut, and this is really profitable business that they're running there. I think, yeah, you brought up a very good point, which I missed just now. Thanks a lot. Let's move on. How is Prime Video content as compared to Netflix, Disney, Paramount? Is it good that people will subscribe? How about the quantity? You want to help out YCX on this? Have you been using? Which one have you been using?
No, no comment. Never really used.
Then for myself, I think in terms of quality, a personal view, right? My favorite is still Netflix. I think Netflix, when it comes to, especially their own productions, and nowadays I think most of all the new shows are their own productions, right? I think there's some very Netflix feel of it, which I like. So in terms of quality, I prefer Netflix over the others. For Prime, Disney, I think they also have their own feel to it. But in terms of the content, quantity and quality of Prime, I don't think they are as good as the rest. Also because they don't have to have so much content, right? Because it's like Prime Video, it's not like they try to compete as if they are the same thing. Because I think as long as you are the Prime subscribers, you get to access to this video. So it's a bit more like a value add. Like I give you more reason for you to subscribe to the Prime, and not like they go build this Prime to compete with Netflix head on. So there's some difference there. I guess, let's say if you talk about Disney, maybe there are customers that say, okay, I have Netflix, I don't need Disney. But I believe if you stay in US, right, definitely you have a Prime account. So anyway, you will watch those content and you get value out of it. So in terms of the go-to-market of the strategy-wise, I think they are very different. But in terms of the content, in terms of the quantity and quality, definitely I think Netflix is still the best. Maybe followed by Disney and Paramount, then followed by Prime, like and Apple these are the two that I think still new and they are still building their catalog, right? So I don't have like huge expectation on this, but definitely these are the new business lines that they are trying to invest in. So usually they started out slow. You need to give them another like maybe 3-5 years to see where they are going on this stuff. So yeah, overall I think this is the right thing to do. It's just that like when you put side-by-side comparison, I think that's not what they are trying to do there. Because side-by-side comparison imply that they are, they are like individual companies that are competing, which I think for Prime situation isn't the case. Yeah. So that's my comment. But I think one thing I'll point out on this is that, yes, I think in the past when you have Netflix and then access to Netflix means that you have access to everything. Not everything, almost everything. But now I think all these catalogs, like the content that Netflix didn't own, right? Actually, some of them they pull out already. So I think what we have now is like there are like different streaming services, right? What happened is that I think for those who really a bit more how to say cost conscious, right? I think one thing they can do is they can just subscribe to Netflix for like 3 months, just binge watch as much as they can, and then just unsubscribe from Netflix and go and subscribe to Disney, right? And binge watch Disney catalog. They do this, they can save a bit of cost. I think definitely this is something consumer can do. So it might have some impact in terms of the revenue to all these streaming companies, because they really like they charge you a month, they give you access for a month, and then if you stop accessing, you can stop paying, right? So when you have like 4 or 5, I think it doesn't make sense to subscribe to all of them at a single month. So there might be people who want to be more cost conscious and just rotate around the services. I won't be surprised if some people do that now. So it might have some impact there. But all these companies, I think, especially like Netflix, Disney, these are the services that already have enough subscribers to make the service work. So they have enough revenue to keep on creating content. So I think that's more important, as in they don't need to get shareholder money to burn to gain share. So they are, in this sense, they are like quite mature companies already. Okay, Lazada got coin we don't know how to use. Not like Shopee, simple to understand. How does Lazada coins work? Why they not improving and let Shopee take all your business? Well, I haven't been using Shopee coin or Lazada coin in the past. This is not my thing. I see whether YCX or others, anyone want to comment on this? So YCX, do you use all this like coin exchange? Something, I don't know.
No.
No, anyone else? Okay, no, let's give it a pass. Is there a risk Tesla with so much cash, instead of dividend or buyback, must use them to buy Bitcoin or funny things? Not sure why this is a risk, given that they already done this in the past. Yeah, so you really use Tesla balance sheet to buy Bitcoin. So you can call it like crazy, or you can be like a bulls on Bitcoin and think this is important because you don't trust US dollar. I don't know. This one really, it happened in the past, right? So things that happen in the past, when it happened in the future, you shouldn't be surprised. So that's one thing I want to say. The other thing is that I think, okay, in my personal view, right, is that if the core business of the company like Tesla is building car and energy products, energy storage, right? Once they have a lot of cash, right, they should use the cash for either dividend or share buyback. I think that should be the thing that they should do. Okay. I mean, when they go and buy Bitcoins, it's not like cannot do. I mean, small amount, usually not a problem, but they shouldn't use it to like just keep on storing Bitcoin in the companies and make the companies become a proxy for a Bitcoin investment. I think that is something that they shouldn't do, because you still need to come back to the mission, vision of the company, like the core business model of the company, right? If the company is really a car or EV companies, then you shouldn't make it become a Bitcoin companies, right? So that's just my own opinion. It's not like I have a big problem of them buying Bitcoin. I think relative to their balance sheet, it also isn't that big when they did it. But so far, I don't think they will go back to this. It's just that anything can happen. So you shouldn't be surprised. If you think this is a risk, right, then you shouldn't touch Tesla at all. Yeah, because you are so bearish on Bitcoin, right? Could be, I don't know. So take this into considerations. Okay, next one. For MacBook, if any parts like battery is spoiled, can we buy the parts to change like Dell laptop, or cannot have to go back to Apple? I think this one really depends on the warranty. So if it is within the warranty period, you should go back to their, the authorized, what they call it, the authorized repairer or something, so that you just make use of the warranty. So that's the first thing, right? Because if you go to outside shops to do some repair, maybe the warranty will be wiped out, or let's say you get some, not like some bad spare parts, and let's say if it affect the performance, that's something bad, right? So I don't know. I think this is something that you can consider. Yeah. But definitely if you say parts change, I think all these outside shops, right, all the small shops here and there, they should be able to repair, do some exchange here and there. I think this is something that they are able to do. Whether you want to do or not, you might want to weigh the pro and con. But if you bring back to all the authorized one, for sure it will be quite expensive. So up to you. I don't have a preference here. I don't even have a MacBook. YCX, you want to comment on this?
No, this one, you usually just go SimLim. If they say can do, then you let them do. Or if cannot do, then too bad.
Yeah. Yeah, SimLim, just go SimLim and ask around. Depends on what are the items. So sometimes if it is battery, I think it's easy fix. But let's say if it is a motherboard, then I think gone case already. All right. Next one. For normal Dell Windows laptop, is it necessary to install antivirus, or is it the Windows protector good enough? I think there are free antivirus. I think at least just install one. For example, I'm using the Avon. Let me give it a quick check. Not Avon, sorry, I got the wrong name. It's the Avos free antivirus. So just install that. I think it's free. Whether it's good enough, I think it's better than you don't have one. So I think I don't think it will conflict with the Windows protector. I don't think the Windows protector is something like it's like it's not a substitute for the antivirus lah. So given that you have a free version, right, just use the free versions lah. Don't have to subscribe the premium one. I don't know. I think that's my recommendations lah. Tencent few years back give JD as dividend to their big shareholder Prosus. Have they finished selling their portions of JD shares? How to find out? Yeah, I think the JD shares, right, it's not like they give to Prosus. They give to every one of their shareholders. So if you have a Tencent shares, you get some JD shares. So sometimes it's in odd lot, so you can like sell them, right? So I think last time I have it, and then I sold the JD shares. Oh no, the JD shares. And then I think the most recent one is Meituan shares. They also give out to their shareholders. And so if you receive the Meituan shares, you want to sell out also can. So this is like what we call it's like a dividend, but it's paid in the form of the shares of the company. So you can just sell out. So whether you want to see whether they have finished selling, I think they have sold all of them. Like this is not like they sell portion, right? When they offload, is really the entire JD shares they offload it. So I think same for Meituan as well. So I think if you look at Tencent annual report, you should be able to look at the companies that they have stake in. Yeah, so that's the disclosure that you have. Yep. Why subscribe to Netflix, Disney, etc. if there are websites to stream drama or movies for free? Is this considered lousy moat? Raise price, go privacy? I think it's just the experience. Because let's say if you go to like all these streaming websites, right? One thing I noticed is that there are so many like advertisement floating around, and then all these websites, right, is not like entirely like clean website, right? We don't know whether they have virus or not. That's one thing. Secondly, sometimes, stuff that's floating around, some of this comment also is maybe not children friendly. So let's say if for this family that they have children, right, they might just go for like Netflix or Disney. At least you have a clean, like a very good experience as compared to all these, like websites, free websites, right? So and another thing of all this Netflix is that their recommendation is so good that once you use it for a while, right, they will just recommend shows that you like, right? So sometimes I think there's like huge catalog. Some people, they just don't want to like, put a lot of effort to discover what kind of shows that is good to watch. They just want the recommendations, right? So they've been happy with all this platform. They just don't want to let go of it, right? So they will just continue to subscribe. I think there's a how to say, if you are investing in Netflix, Disney, I think you are betting on like the inertia. People subscribe to it, they get a good experience. The subscription fee isn't very expensive, so they're just happy paying, right? It's some similar to like your like electricity bill, your phone bill. Every month you just pay without thinking too much, right? So I definitely think that there are enough people that don't do like inconvenient stuff just to save the cost here and there. So that's why the business can work. Like if everyone just try to save costs and privacy here and there, then I think this business won't hit today's success now. So yeah, whether moat or not, I think it's not just about whether you are able to download a pirated version outside. It's more about like people's behavior. You need to put this into consideration.
Yeah, so one of the things that I would say is that the piracy is usually accessibility, as in whether there's piracy or not is a accessibility problem. It's not a price or payment problem. So when I subscribe or I use things that are like this kind of buy, even though they are like free versions or things, right? Or let's say I just take one example. Netflix, I subscribe to it because I watch it and I don't really need to do much to it. I can just put it on the iPad or something and then just watch. I don't have to download or wait for things. So to me, is a time save over there. But then there's also no advertisements or anything. So I just get what I want and like instantly, and really for like $15 a month or whatever. I can't even remember how much I pay a month now. Then it's nothing much, or like 50 cents or $1 a day is really okay. But the one example that I want to compare will be like Microsoft Windows, right? Like nowadays, I find that the Microsoft Windows gets more and more not friendly, because in terms of like they have a lot of advertisements that they put in, or a lot of changes that they put in that they don't really give you any control over. They just change and then they include in like an advertisement or here and there, even though it's a product that we seemingly paid for. So then that kind of like drives me for certain systems to not use Windows at all, or to use a version of Windows that's old, that is free and old, that kind of things. So as you can see, it's not the cost that's motivating me to buy or not buy. It's more of like whether it inconveniences me in some way. In this case, Windows inconveniences me in advertisements and in terms of like how they restrict the way I can use their OS, or they do changes to it without telling me. Whereas Netflix, in another way, you can see that even though I don't have much control over it, the product is simple and I expect that kind of simplicity and there's no ads that are playing for me. So as long as the product is what is expected, it's fine. But if the product is not what's expected, then people start to turn to alternatives. Yeah.
Yeah, I think that's definitely true. Sometimes it's about philosophical kind of debate, right? We just want to be aligned with the companies. Sometimes when the company do something that we don't like, what we can do is just look for alternatives. Definitely agree with you on this. Okay, if you have Kindle, is it next time when you need to read a document, you don't have to print it out? The experience, is it the same as being printed out? I think it's even better than printed out. Say, for example, I have quite a number of books actually on my shelf here. So in the past, I've been using buying some physical books. Then I realized actually all those physical books sitting there, I haven't been like pulling out the books and read the books. I actually prefer to read Kindle because I have one Kindle. I can store so many books into the Kindle, and then when I go out, I just bring out, right. It's really save time. For example, because when I commute to work, it's like 1 hour plus, right? So I can just read the Kindle. I think it's really providing me a good experience as compared to like bringing out physical book. And some more people don't know what kind of book that you read. You can have some privacy there as well. So these are really some advantages of using a Kindle. And the batteries just last days and days, right? So you don't have to worry too much about the battery as well. It's something good to know. Yeah. So I would say that in terms of experience, save space, convenient, you can have timely information, stuff like I said, just port over to the Kindle. All this is really good. And the best thing is really the screen. It's really good for your eyes. So just try it once. I think you will like it. That's my recommendations. I think it's the best investment. And there are so many free books out there that you are able to find online, right? You just download it and then port it over. You can read the book already. Save so much cost to buy the books, So that's the thing. Where is Master Leong when he come back to do TCSS, or is it he changed nick to YCX? They're quite similar. Okay, let me answer. I know I say it's here. Let me answer. Master Leong, right? I think he first thing, if you want to follow him, you can follow his YouTube. I think he has a YouTube channel. He has all these like live streaming sometimes, and then he have YouTube shorts. Sometimes quite fun to watch. But I think recently he said he want to take a short break, and then I don't know. I don't recall he has been posting videos in the past, let's say 1 to 2 weeks. Secondly, I think if you want to follow him, he has a Substack. You can read his Substack. I think but you need to subscribe now. So I don't know whether he offer like a free version or what. But definitely those who are interested can follow his Substack. That's the two main source that you can follow Master Leong. Change nick to YCX, definitely no. YCX has been with us since early days, and he's on the shows. You can recognize him from his voice. Face, I don't think you can recognize his face because YCX never show his face. Yeah, keep that as a privacy, right? Yeah, in terms of very similar or not, I would say 100% not the same. In terms of company, also different. So YCX is very bullish on NVIDIA, right? And I think one of the most recent video that Master Leong posted is that he say NVIDIA will crash, Tesla will crash. These are the company that he keep on, bashing. So yeah, definitely different. Just for clarifications. Maybe whoever asking this question is new to the group, so he might not know. Okay. YCX, you want to comment on this?
No.
Quite funny questions. This one. Read Amazon transcript a few times, did not find 500 basis point decrease in cloud for Q2. 5% in decrease in cloud. What is this? Is this profit margin or what? I don't know. Where did the reporter get this info from? Where did this 500 basis point comes from? Maybe you just do a screenshot of what is this that you are saying. Because when you say 500 basis point decrease, what is decreasing? I don't know. So very hard to comment. So if you can screenshot post on the group, I think someone will just tell you like where this from. Okay. What are some sectors that do not often get news coverage but do well? Any companies? I think this one very good questions, but I think I can't think of any because I think there's so many.
The 500 BPS is growth, revenue growth sloped by 500 growth, not revenue. It's revenue growth sloped by 5%. That's the meaning. Year on year slope by 5%.
So it's like they grew at 30%, now become 25%.
Something like that, correct. 16, like 21 to 16 or something, I think so.
Okay. Oh yeah, because the latest one is 16, right? Yeah. So maybe from 21 to 16. Okay, maybe later I verify, look at the IR website and check that. Yeah. Come back to this, what are the sectors that not often get news coverage but do well? Actually, there are so many companies, right? Thousands of companies out there. I can randomly do a random how to say use Excel macro, do a random pick, right? I'm sure you just randomly pick 20 companies out of the 8,000 companies that's available. I'm sure that 20 companies you won't recognize more than two. There are so many companies that we look at the names also, we haven't looked at the names. There's so many companies, so many sectors. I can't really give you any sectors or names that people don't talk about, because I will say by definition, most of the companies people don't talk about. Yeah. So that's my take on this. You can just do a random pick and then just try to read out of the companies if you are interested. But for me, I don't do that. It's because there's I'm still working full-time, not a full-time investor, right? Where I got so much free time and energy go and do this kind of like research into like all sorts of companies and try to find companies that people don't talk about, right? So I'll say by definition, my research is always on the companies that people talk about. Whether by people, I mean either friends or, like news article. So that's by definition. Of course, if you want to do that, you can random search, right? Or you do, let's say like some screener, you want to screen for companies that PE less than 15, growth rate more than 20%. You can do all this screener and look for some companies and just pick a couple of companies and do your research, right? So that way, right, higher chances that you will uncover companies that people don't talk about. You can't rely on asking people, because you ask people, by definition, people will give you companies that other people talk about, because these are the companies that have higher profile and higher publicity, right? Yeah. Use screener. That's the tips I give you.
There was a paper that not too long ago, I think probably December 2022, whereby it is a paper by NVIDIA research fellow, whereby he did a meta-analysis on all the stocks that are in like SP 500 and in like the Russell 2000 and whatever else, right? So he did the meta-analysis is based on like all the information that is available. That means, like, for example, a company reports when they file their public reports, right? Like all the information that's available. And generally what he discovered is that the companies that usually have more transparency, right? That means they report more things. If you just separate them out into like buying the most transparent ones and the least transparent ones, right? Usually the most transparent ones consistently over all periods of time, right? They generally do better than those with lesser transparency. Yeah. So that is the kind of meta-analysis that was done. That means usually the conclusion that's drawn from here is that usually companies that are doing things properly, they will opt to actually report more things, whereas companies that are not really doing things properly, they will either have some kind of issue or they are not reporting it properly. Maybe they don't have resources to spend on reporting it. Yeah.
Yeah, I think that's a good point. Yeah, I think in terms of all this analysis, sometimes I think it will be just be careful of the biases, because like you say, the reason might not because of the transparency, but because the resources, right? So companies that they do well, have more resources to report more. So it gives an impression that those who are more transparent become like better performing. So I think there are all these biases in the data itself, and just be careful when it comes to the interpretations of the result. But yes, I definitely agree that for companies that they share more, right? So sometimes all these companies, they share also for a reason, because they need to work with the partners, right? So like I think you talk about NVIDIA quite a number of times. They cannot do everything by themselves. They really need all these partners, all the developers to be on their platforms. Hence, they really need to, like share more, explain to more their methodology, explain to people why they are doing certain things and not doing other things. So more transparency will give people better understanding on what they are doing. And so people can like choose whether they want to, partnering with all these companies. So I think there are some the advantages of sharing more, and they are honest about it, right? You can always say that, okay, this is not the way I want to go and I don't want to partner with you. That's fine. But for those who are partnering with companies that share more, they tend to, have a long-term good relationship. And that actually help all these companies. It's a mutual relationship for mutual benefits. I think this is definitely something worth to point out. But yes, for other companies, let's say, because like I said, right, there are thousands of companies out there. Actually, if you just rank them by quality, maybe, like three quarter of the companies may be like, in terms of quality, they are not good. There are so many bad companies out there that you want to pay attention to. So if you want to go into these companies that people don't talk about, you want to make sure that you have good due diligence skill. It's not like to say that, okay, because this company no people talk about, so it's not crowded, right? They call it not crowded. So then you can get a higher return. It isn't the case. Sometimes all these companies, they are like just having bad business model, bad leadership. I would say most companies are not good. The good one, the top quarter one, usually they can grow big. And that's why we were able to see them. The question is more like, okay, whether at their current valuation makes sense or not. That's an entirely different discussion. But when you do the screener, I would say that that's the way to find companies that is people don't talk about. But you will have more problem when you pick a small companies, you don't know whether it's good or bad. And sometimes it's very hard to assess, especially there's limited information that's available. So those who read the companies, they also, okay, I don't know how, then I don't talk about it anymore, because there aren't that many informations that is available, right? So yeah, something to pay attention to.
And usually, if you like thinking from the perspective of equity financing, usually it's also affected by the perspective of debt financing, because these companies that don't get much from equity financing, the next thing they will do is they will turn to debt financing. And when they turn to debt financing, usually the banks, all these, they have very standard ways of valuating these companies, like how much to value them at, and also what kind of interest rate to charge them. So, and it's usually by what kind of sectors they are in, what kind of industries they are in, and also all their finances. That means like what's their revenue, what's their profit margin, all these things. So when they present their information to these debt financing people, the debt financing people, they are just there to make a return, and they don't care whether they do care to some extent whether your company closes down, but then because they are quite high on the hierarchy of the financing structure, so they are relatively safe. So they then how they value the company is based on this kind of broad benchmark. So you can kind of see from there as a baseline what is these smaller companies value at, and then if you want to get into their equity, then it becomes whether you have that kind of edge or information that other people or other things might not have, or you believe in their founders, or you know that their founders are very good at executing or some kind of thing. Their management is good, or their product is truly very unique. Then you would do equity financing for those lah. So it also becomes like a matter of what's your portfolio size and what's your portfolio management strategy. Or because if your size is not very large and you go for this kind of things, there's a question of whether it's worth the effort lah. But then, of course, this is also the areas whereby if you really do your research and things, then you are looking for those kind of like 10 or 20x kind of returns. But it's a matter of whether what's your size, because usually if you are going for this kind of things, is you are probably only putting like maximum like 5 to 10%, and that's really very high really of your portfolio into these. Like if you are putting 100%, you are either like the founder themselves really, or closely related to them, like parents of Jeff Bezos, that kind of things.
Okay, thanks for the comment. Okay, I think questions keep on coming, man. It's okay. We try our best. I try to finish in like 10 to 15 minutes. Go a bit faster. Punti, you subscribe ChatGPT. Can you share some experience so far? What led you to subscribe and what you use it for? Okay, I subscribe to the ChatGPT Plus. I think mainly is because I want to make sure that whenever I need it, I have access to it. Sometimes, if you get the free version, if there are too much demand, sometimes they can't serve you, right? So that's one reason. And the good thing about the Plus version is that we get access to GPT-4. So I believe GPT-4, based on my experience, the quality is better compared to the GPT 3.5. They can give you more like elaborated answer. But I think ultimately the quality of the answer really depends on how you prompt it. I think this is something that people might miss it. Is that these are the new tools that is available. You want to subscribe to it, use it, know how to prompt it, so that you can use it to supercharge your own productivity. So sometimes even let's say some of these questions that people ask me on Sido, right? Of course some of the questions I know on top of my head. Sometimes I don't know. I need to do some Google search. So right now, instead of Google search, I can just prompt it in ChatGPT and just read the answer. It's just that we need to keep reminding ourselves that the response given by ChatGPT, sometimes they have factual error. So you might want to pay attention to that. Also, with experience, what kind of information that you can rely on and what kind of information you cannot rely on. And let's say you also need to know how to prompt it to say, okay, basically it's asking ChatGPT, like, are you sure? Then they might rethink again and come back questions to justify, or you can ask them to tell you what's the reference, so that you can use that reference, some website or anything. Just go to the website and verify it yourself, right? So all this definitely, I think in terms of a tool, right, it's very useful tool for us to use, supercharge our productivity. But we as a user, we need to know where they are good at and where they are bad at. So this one is really like experience. You need to use it for some time to know. So I think this is really some good tools to use. I definitely think that it's worth to pay the money for me personally. I won't recommend it for anyone. But let's say if you are just a user, I think the free version one is quite good already. Just use it and see whether how can incorporate this into your own workflow and see whether it can help you in terms of what you are doing, whether it's sort of research or whatever, right? So I think this is something, some good tools to use. YCX, you want to comment on this, because I know that you are also using the Plus version, right?
Yeah, right now it is kind of, I would say that about 1 month back, it was way better than now. I think they kind of like added in some controls or something. So there are some topics now that are more like censored. So it is also a matter of like time and effort. So for those more censored topics, right, or they kind of like make it more difficult now to extract answers out of them. Then the other issue is also that certain topics that are more niche, ChatGPT will not really have uh because of the way it remembers things, and because like it's trained on the internet. So there's a lot of information on the internet that like let's say when I talk about like economics or like monetary policy or fiscal policy, because there's so many conflicting opinions, ChatGPT is just kind of like um getting all these opinions and mashing them together and giving it to you. Sometimes the things that they report back may not make sense, and then like they get things wrong. So this kind of hallucinations, you have to kind of like work out the math yourself or think through whether what ChatGPT says is correct. So the of course it's good as a starting point, because they when you ask things and then they present to you in a format, you are able to see what are the things you want to look out for and check. It really depends on you as a user and how you go about thinking about it, because it's like it's like a very fine-tuned machine, but you need to know how to operate it. Yeah. Then right now I have access to the API as well. So I'm using it in other ways, because I want to do some kind of a summary board later that I can summarize things so that I can read faster. Yeah. So that's the other users for it. So if you want to sub to it, is kind of determine like what you want to use it for and how you use it. Because you sub, if you don't use, then also no use.
Yeah, definitely. Have you used like the API and also the plugin or the Auto GPT? What kind of things that you have been using on this the latest one?
Current workflow is that I don't really have much to use on it that I don't really know. So the thing is that I want to later write some code with the help of ChatGPT to extract information from the API. That means I'm just going to pass info to it. Usually it's transcripts and have it to summarize for me and give me answer from the transcripts. So that's because there's a lot of all these company reports that I want to use it on, and the Microsoft one is kind of limited. So I don't really want to use the Microsoft one for now. Yeah, so that's the things that I'm using it for. For the API, that means I'm just going to pass it transcripts and then let it summarize for me and see how it goes off from there. I mean, I've done it like on the manually and it works. Yeah. So now it's just a matter of writing some code to automatically get out transcripts from videos and then use it to summarize it.
Okay, sounds interesting. All right, thanks for the comment. Let's move on. Can you advise top 10 books you like, can be investing or non-investing? Actually, this one, right, I wrote a Substack, see whether I can... Oh, sorry, I don't... Actually, it's okay. I'll put the link in the video. I think I shared it in Telegram group before. I have a Substack that post that talk about the list of the books that I recommend. Actually, those are the books that I have read in the past. So it's not like it's not like top 10. It's like a list of more than 10 books. So if you are interested, you want to discuss anything, feel free to drop the message in Telegram group. We can discuss that. Yeah, quite a long list there, but no time to go through today. This week can buy. I think this question is interesting question, but this questions was asked maybe 2 weeks back, so a bit hard to answer this question. And this question is like everyday questions. Based on current macro situation, do you think that the Fed has gone too aggressive in their rate hike campaign? Okay, again, I think it's a Buffett CNBC transcript, right? If you read through that, I think the host trying to ask Buffett on this question also. Like do you think like Jerome Powell did a good job? What will you do if you are the Fed chairman? Try to ask him to comment. Then he keep on insisting to say that Jerome Powell is great. I can't run Federal Reserve as good as Jerome Powell, and so on. So I think I have the same stand as well. Is that actually, we know that after the fact, let's say after 6 months, we will know that whether they are over tightening or under tightening. But at current point, it's very hard to say because this is macro things, right? Of course, they have all the data that they have. They make the decisions, and then just continue with it. It's hard for us to comment because we have even lesser data as compared to the Federal Reserve, right? So whether they are too aggressive or not, I think not far from the right pace as of now. Like we haven't seen like a huge meltdown also, right? And inflation is like cooling off. So I think I would say it's perfect but let's say I think it's not that far from perfect That's my sense And I would say that many people they thought that they can run the Federal Reserve better than Jerome Powell, and I doubt that So I doubt my capability as well on these questions. Let me take a look. Jay, are you here? Do you want to comment on this? Okay, let's move on. What should the Fed do if core CPI is consistently high but CPI is already low? What are the effects going forward if the situation does not change? Okay, YCX, you asked this question, right? Let me try to answer first. I think given their current mindset, which is based on what they have shared, right? As long as the CPI, the core CPI consistently high, right? They might not raise the rate like 50 basis point every quarter. I think they will at least keep it at 5%. And just wait until the inflation cool off. Unless really is skyrocket up again, then of course they have to review it. But because your question, you say that it's consistently high. I'll keep it. I take it as like current core CPI just stay and doesn't go down, right? I think their Fed fund rate they will also keep at like 5% and just stay there until it cool off. Because right now we can see that aside from the Fed fund rate, there's already some things that's happening on the banking side as well as that means on the funding side, you can see that there's some tightening from the banks. So it helped with cooling the markets. So I don't think they need to hike it too much from now on because we are already at a quite elevated level already. But when you pair these two questions together, you are implying that CPI already low, meanings that maybe the CPI low is because of all the the energy costs, right? So I don't think this is what they pay too much attention to. It's because energy price, let's say if it drop a lot, cause the CPI drop, right? But you won't expect that to be sustainable one because energy price can drop year on year, but it won't like keep on dropping year on year for many years, because cheap enough, some of all these energy companies, they will just stop with the production, and that will put a floor, right? So I think back to your question is that I think yes, still the core CPI is the one that they pay a lot of attention to, and if it is consistently high, I don't think they will cut the rate. They will just maintain it there so that it will exert a tightening effect continuously. So YCX, not sure whether I have answered you this question or anything you want to elaborate on this.
Okay, it's okay.
Okay, thanks. All right. C News, OCBC, and SIA take part in Roblox Metaverse. What is this Roblox about? How come even our SG company also involved? Is there exciting long-term business opportunity? I don't know about this. Anyone want to help up with this? YCX, you know about this? OCBC, Roblox thing, Metaverse?
Roblox is kind of now like a dev platform with a lot of things going on. So it's kind of like the early days of epic games like that. The Roblox platform is kind of like the Unity, like the Unreal Engine like that. But they also allow people to build things on it. So like when you build things on it, you can, because Roblox is just a main basic bare bones game. But then because of how they do it, you can write code for it and then also like publish on the platform. So think of it like social media, but it's actually like social gaming media kind of things. Yeah. So it's still early, and still quite technical because you kind of need to have the skills to be able to create these kind of games that people will pay money or buy on the Roblox platform. But the advantages that it has is that the player base is young. So you are looking at between like 10 to 18 years old. So if you are there to like build up your brand with like the young children, it is a way to do it. But yeah, that's my view on it. If you are building brand, you're targeting kids that going to be like the next population. When they grow up, they will spend on it. That's how it is. So of course, with regards to AI and things, the access, depending on how Roblox does it, if let's say Roblox makes it easy to program games inside their platform or programs apps inside their platform with using AI and things, right? Then that is how they can scale up and improve number of users and improve amount of content generation. This is an execution problem. It's not a definitely will happen or definitely won't happen thing. It really depends on how well you know Roblox and what is doing. But the general outline, this is what I can tell you, what they are targeting for, and how they are expecting it to play out, or how companies in this area are expecting things to go.
Okay, thanks for the comment. I have no comment on this stuff, but I think it's something like you said, it's early. Probably these metaverse things will become big as envisioned by Mark Zuckerberg. I also don't know. But definitely Roblox, I think when it comes to metaverse, they have a place there because of like you say, the developers are there. Because essentially those players on the platform is not really just to play games, right? They are there to create an ecosystem, a world, basically a metaverse there. So I think that's interesting for the youngsters. So I haven't used this before, but I heard that those who are very young, I would just, just every day onto Roblox and just play. And they have their own currency in there as well, right? Called Robux or however. So I think this is definitely quite interesting. But I don't know the full details. All right, I'll just go a bit faster here. I think this one question from Jay. Apple launched a saving account through Goldman Sachs with 4.25% yield. What's in store for them? Do you foresee other tech giants follow suit? Then will this move by Apple shake things up for the traditional brick and mortar banks as well as those new online banks? I think this one, right, in terms of looking at it from Apple's perspective, I think this is where they try to grow their services line. So we know that they have been selling devices. That's their core products. Then I think in a few years ago, they tried to go into services which include the Apple TV, the Apple productions, right? And then at the same time, on the finance side, I think they have Apple Pay in the past. So I think it's just like using this Apple Pay and just expand the kind of services that's available onto their platforms. I think one thing Apple is extremely good at is actually the UI front. So they everything that they do, right, is actually the same as other offerings. It's just that they make it cleaner, simpler to use, and just more intuitive to use. So I think here the easy things for them to do, right, when it comes to finance, fintech or payment services, right, is the one that you are showing here, which is the saving account. Because when you have fintech solution, first thing is like a wallet. You need a wallet, right? So that's the saving account. And then I think the next one, or maybe they already have it, I'm not too sure, is the buy now, pay later. This is essentially a form of like short lending that Apple give to their customer. And this is really pair it together with the payment, right? So you can call it lending, but this is different compared to the normal traditional banks lending, which is for mortgage, personal loan, and so on. So it's slightly different there, but still is considered like fintech lending. So I think these two are the low-hanging fruits. Are definitely they are either doing that or will do it in the near future. After that, what kind of things that they will try to launch, I have no idea. But I think around the fintech kind of ecosystem, including, you know, like for example, like payment, infrastructure, this kind of things, for sure, there's already announcement, right? They will do all this, right? The payment network and so on. So they are doing that, and I think these are the area that some of them we don't pay too much attention because these are the infrastructure level kind of things, right? But once they are in there and build the infrastructure, I think definitely this is good business and it's a profitable business to do in this area, the fintech area. So, and other online banks or other big techs, I have no idea. But I think, for example, like Google, they also have Google Pay, right? So I think they are doing similar things. But in terms of their approach, implementations, where are they now? What's their plan? All this, I have no good visibility in those areas now. So still have to pay attention. And usually these are the things that involve like regulatory, right? Because we're talking about bank. So I think they can't do it end to end. So they have to do partnership with other traditional banks. In Apple case, they have been partnering with Goldman Sachs for quite some time. So I think they will continue to do that. So I think that's a comment from my side on these two questions here. Why Enphase seems like a lot of attentions? Any views on this counter? Is it a quality business that we can buy? So on this company, actually, maybe I just do a quick demo on what I'm doing with ChatGPT, right? Because just now there's questions that ask about ChatGPT, right? So I just do a quick questions that tell me about the company Enphase. Then they give some introduction, so you can post here to read if you want. Then they talk about like microinverters. These are the main products that so-called they have some moat there because there's some, you know, in terms of the quality seems to be good. But this is ChatGPT answer. I don't take this as like the correct. You still need to verify all these informations. Then I ask what are their competitors. So they ChatGPT give me a list like Solar Edge Technologies, SMA Solar Technology, ABB, AP Systems. Then I asked ChatGPT what's the key advantages. Then they mentioned to me the microconverters, right? High efficiency, reliability, module level monitoring, scalability, and ease of installations. So a couple of points here. Then I asked about China. Do they sell to China? Are they competitors from China? So they also come up with some answer here. Like for example, Huawei, Sungrow, and Jinlong Solis. So these are the companies that are in the solar industry. But in terms of the product, whether they are same or not, it seems that it is not the same. There's some similarities there, but I don't know the full details. So I think this is just to showcase to you that, okay, these are some of the things that we can prompt ChatGPT to get some answer. And once I have all these names, right, I can always go and Google and then go and search all these like Sungrow, Jindong, try to understand what are the differences to understand their business. These are the things that we can do. Then back to your questions, right? Why so much attention? I think main reason is because this company, the growth rate is very high, especially in the past 2 years. I think the most recent earnings, the growth rate came down a little bit, but still very high. Secondly, I think this is the company that take advantage of the growth of the EV business. So anything to do with EV, there's a bit like hype, or you can call it bubble, or you can call it high growth future, whatever you call it, right? But definitely there's a lot of attentions given to this area. Whether it's quality or not, hard to say. I haven't paid attention to, haven't studied, haven't do the extensive due diligence. I can't comment on the quality of the business or the leadership. All this will take time now. So if you are interested, I think first thing to know is that you have to study what is micro inverters. I myself, I don't know what is that. And then you want to compare the offerings of other companies and just do some due diligence then. Okay, given the constraint of time, I will stop here. Just see what we can go through here. Buffett or Soros? Answer is Buffett. Done. BABA reorganizations. It will be some like conglomerate SoftBank Prosus, variable subsidiaries, but have holding company discount. So back to square one, your view. I don't know. I think these reorganizations, right? I won't pay too much attention to it because they are still under Alibaba Holdings. Ultimately, you want to see how much they can IPO the other companies. yeah, I don't pay too much attention to it unless really they can show that they're able to IPO these businesses at a very decent valuation. If not, to me, it's still the same thing. Okay. Buffett, Munger, Smith has strongly criticized stock-based compensations. What's your point of view and how that impact the growth of a company? Do you consider that in your DCF? I think in terms of Buffett and Munger, right, they are not a fan of stock-based compensation. So they always think that as company print all these stock-based compensations, right, meaning they are printing shares, right, it's a form of dilution. So to him, right, he will rather like let's say he has an employees, let's say a CEO, right, he would rather just pay the CEO using money, using like just money instead of paying using shares. So that's the way. And then if it is a high position, say for example, the CEO positions, right? In Berkshire Hathaway case is Greg, right? So he would rather Greg just use his own money and buy a huge stake of Berkshire Hathaway and just be an investor himself, right? So that's why I think he want the alignment, meaning that the CEO and the chairman must have a sizable stake in the company, but he's not a fan that the shares is acquired via stock-based compensations. So this is Buffett and Munger's view. I think same for Terry Smith as well. Yeah, in my view, I think that's definitely the right way. It's just that, let's say, if you go to tech sector, it's quite a norm that all this tech sector, they pay their CEO with stock-based compensations. Right? So let's say if you have a strong negative view or perception on the stock-based compensations, then what happens is that you will just screen out quite a number of all these young tech companies. So I wouldn't say it's bad. I would just say that just be mindful of that and be more mindful of how much is the stock-based compensations relative to the overall shares, meaning how much is the dilution. And secondly, if the dilution is only a couple of years in the beginning, and once the company, they grow at high growth and they mature in a couple of years time and they don't have to continue do this, right? So pay attention to the trend, like would that as stock-based compensation like trending down very fast, or would it be something that they consistently every year keep on issuing as stock-based compensation? If the dilution is the continuous, then I'll just say all this upside, right, is just all given to the insiders and not the shareholders. So this is something to pay attention to. All right. Next one. I feel the market is overcrowded, overvalued, and full of noise with current flavor trend AI. How to stick to fundamentals and find good investment? If you think the company is overcrowded, maybe just stay away. Like no harm to just park some money into cash and just wait, or just stay away from anything to do with AI. I don't think that's an issue. But ultimately, we want to invest in companies with good fundamentals. You want to do your own due diligence and want to study the companies that you are interested with, right? So I think this is very individual. Yeah, everyone just have to do their own thing. If not, if you just invest in like a broad-based ETF, by definition, you are not concentrated into AI or IT trend, right? So it's not a problem for you if you just do a DCA into broad-based ETF. But if you do your own stock pick and you think the AI space is too overcrowded, I mean, stay away. No, I don't think you have to chase every trend, right? Yeah, so we want to invest in a company, good companies that enjoy all these tailwinds, but you want to make sure that they are not hype. And sometimes it's not so easy to distinguish whether it's hype or it's a one-off thing or whether it is something that's sustainable, right? Say, for example, like if you go to 10 years ago and look at Amazon, you might say that, oh, e-commerce is just a hype, right? But after 10 years, you look at how much the size has grown, right? So you know, sometimes things that look as if like a hype, it could turn out to be very sustainable for like 5 to 10 years, right? So, and it could be vice versa as well. So if it is that easy, everyone will be rich, right? So I would say that it's not easy. But if you think it's overvalued and you don't want to chase, you shouldn't think that that's a problem. That's my view. But if you think it's a quality business, of course you want to own it and just hold it for the next 10 years, right? And see whether you make a right bet or not. All right, last one. Meta business messaging user increased 40% quarter on quarter. Revenue run rate 10 billion in 2022, meaning likely revenue of other business units actually reduced. Do you think, is it correct? Okay, first thing, I haven't read into the details. I don't know about the 40% quarter on quarter, and I can't verify the revenue run rate of 10 billions. But what I can say is that anything to do with the business messaging, right? This is something that they plan to do. They are doing something there, but I don't think it is a big percentage of their current business. Their core offering is still the advertising, and maybe they want to grow. There's a couple of lines they want to grow there. One is this business messaging. The other thing is their e-commerce. But I think all of this is very small. I think the core part is still back to their core business, which is the advertising. So I will say don't pay too much attention to this area here. Okay, it is very small. So a very small base grow by 40% doesn't make a dent. Yeah. I don't know. Y6, you have any comment on these questions or any other topics? Anything that you want to share before we close in?
No.
All right, then. Nice to chat with you, and thanks a lot to whoever watching the recording. I just saw that there's just two of us here. Okay. Enjoy your lunch. Thanks a lot. See you in the next one. Bye.
Bye.